What's going on, everyone? About 58% of the S&P 500 popped up in the green today, and just like yesterday, today was a pretty crazy day for multiple reasons. The first one being that Ford actually had its worst day since the Great Recession, so much so that the stock fell by over 18%. So this thing got smoked today, and we're going to talk a lot about this as the video goes on. But there's also some pretty crazy news related to Google and their new AI-related competitor that we haven't seen anything like this in quite a long time. But either way, we have 1 day left for the week, so let's make it a great one.
Yeah, let's definitely do it, Mike. And the SPY was pretty flat today, to say the least. You know, it ended up closing down 0.52%. It had a pretty good pop up in the middle of the day, though. That intraday move was pretty good. And I know a few people were catching that move to the upside there, but towards close, it ended up selling right back off and close right around that low of the day. So gonna have to keep that on watch for tomorrow, Mike. You know, there was a lot of red out there in the market, and like you said, Ford has been having a lot of issues lately. They dropped down a ton with their earnings. I know that they've been recalling a ton of vehicles here over the past few months as well, and whenever you have everything going on, like all these recalls, missing earnings, it's putting a bad taste in investors' mouths, and shareholders are definitely not happy, to say the least, Mike, with Ford falling down that much. So on their earnings, they missed EPS by quite a bit. Their EPS was at 47 cents per share adjusted versus 68 cents expected, and the revenue ended up beating a little bit. So overall, Mike, I mean, it was a mixed report, and the shareholders definitely did not like it, that's for sure.
Yeah, and then, Tom, we can't forget about that extra $800 million worth of expenses related to their warranty costs. So that was definitely a pretty big hit as well. But either way, when you have a company like Ford down 18% on the day, having their worst day since 2008, that says a lot. And while Ford is struggling, just the auto industry as a whole is just taking a pretty decent hit right now. Even a higher tech auto manufacturer like Tesla was struggling to increase this week. So it just goes to show that it's kind of like a tough industry right now, and I think there are multiple reasons for that. But either way, looking at Ford, keep a close eye on this one over the next couple weeks, because if it sells off enough, it might present some interesting opportunities. But for the time being, I'm just going to sit on the sidelines with this one and just wait, because it's been a bloodbath lately.
It has, and you know, Ford stock goes on some pretty big runs. You know, following COVID, they had a great move to the upside, and they started recovering up like crazy. And you know, right before that recovery, they actually had an insane drop where they hit highs up around like this $18 mark, and with COVID, dropped to lows of 77%. And even before COVID, that was like a 60% pullback from the high there. So you know, it's a pretty volatile stock. Like whenever you zoom out on the chart, and a lot of people have actually been criticizing Ford, General Motors, and a couple of these like legacy auto manufacturers for pivoting too quickly to the electric vehicles. You know, it's been hitting these companies pretty hard as they're trying to keep up with all the added costs and etc. of those vehicles. And of course, those vehicles don't sell very well either, as we've been hearing a lot.
But yeah, either way, whether you're looking at Ford or General Motors or Tesla or anything else anything else out there right now, there has been a lot of selling pressure, and that is also very true for the market as a whole. And one thing that we covered yesterday is that the massive SPY uptrend streak has been broken, and we have some pretty cool data to look at here that basically shows the average number of large down days that we see per year for the S&P 500. So far this year, we've only had 9 large down days, which is certainly not that much, especially when you look back throughout history. And like even if you look at a year like 2022, there were 63 large down days. And even if you look at a handful of other years, it's pretty common to see many large down days throughout the course of the year. So as a lot of people look at the market in the short term, they might say, wow, this selling pressure has just been brutal. But it's important to look at historical data just like this to get a much more accurate view about, you know, what normally happens in the market. That way you can know what to expect going forward.
Yeah, and this year's been amazing. I'm a big fan of the run up that we had, and I thought it was awesome how much stocks have been going up. The long term portfolios have been killing it out there. At least they should be if you're into the right stuff, right? But looking at the at some of these stats is a good thing to do because a lot of traders might get stuck in that mindset of like, hey, the market's only been going up this year, but pullbacks are healthy for the market. They are expected, and they do happen more often than people think. And I think that a chart like this will maybe influence a lot of people out there, and they might, get people to adapt a little bit and start to open up their minds maybe to some other possible trade opportunities.
No doubt. And another thing that we definitely have to touch on is what is going on with Google right now. So looking at this stock, it also had a pretty rough day, and this happened just as we talked about a pretty mind-blowing big money trade yesterday with this one. But either way, Google had some pretty scary news come out today where OpenAI, which is the company behind ChatGPT, is basically announcing a new search engine called SearchGPT. And when you look at Google, especially in their search business, they have basically been just crushing everyone. Like, Google's closest competitor in their search business is Bing, and I don't know anybody who has used Bing in quite a long time. I actually had to look up the market share, and Google has like a 91% market share of the search business, while Bing is at 3%. So basically, when you have news of I guess you could say a pretty rapidly growing company like OpenAI with significant strategic partnerships like Microsoft on their side, it definitely is a little bit of a worrying sign for Google. And basically what OpenAI is doing is they're creating like their own search engine that's going to be like a little bit different to Google. And I think out of all of the you could say Google competitors that we've seen over the years, if anyone has a shot at taking up more market share than some company like Bing, I think it's definitely OpenAI, just because of like how like innovative they have been, and just because of the way the world is changing when it comes to AI. So basically, we can see some visuals on the screen right now and how some of their Search GPT features will look. But either way, I thought this was very interesting because, Tom, how often do we see a company trying to compete with Google that actually might have a shot to actually compete?
Yeah, exactly. Like, Google is in the crosshairs here, and I think that a lot of people might start to pivot towards some of this AI-inspired search engine stuff. Now, obviously, we know Google uses AI in the background on their search engine as well, but, with everything that ChatGPT does, it might deliver a much more unique and better and new experience, whereas people have, been using Google forever. And, Mike, these things do change over the course of history, right? Remember AOL Mail back in the day? That used to be the big thing, right? Now, I mean, everybody pretty much uses like Gmail, Yahoo, stuff like that. I don't really know anyone using AOL. Now we're going to get 1,000 comments of people saying I use AOL, but you guys kind of get the point. These big top dogs in the market sometimes get targeted in ways, and other people kind of take that market share away, and this will be interesting. I think that they actually do have a shot, Mike, and whenever I was looking at some of those examples there on their website, I thought that it was pretty interesting, right? Like the way that they bring it up and show you the data there on like what you're searching. It's a lot different than how Google shows the data there.
Exactly. And, with this news, by no means is it the end of Google or anything like that. It's more so just something that Google has to worry a lot more about going forward, because their giant, you could say, search monopoly is a giant asset to them. And if they start to lose market share, that's going to be a big problem. And I know a handful of people aren't all that pleased with Google's AI offerings right now, and OpenAI is certainly leading the way. So either way, keep this in mind going forward. Google stock has been selling off quite a bit over the past couple days, and for as long as this stock puts consistent pressure on its lows, it definitely has potential to continue to drill lower. Again, like we talked about yesterday, we highlighted a $6.8 million put play with Google, and the stock just fell even lower. So the big money is also relatively bearish, at least in this sense.
Yeah, they are. And, I was about to bring that up again. I was going to say, Mike, who did this, right? Whose brother works at Google and gave him the info or something? That's insane. $6.8 million goes into those 180 strike in the money puts, and we just see a massive sell-off today. I know a lot of the people who are in the trading floor who entered into Google yesterday were extremely, extremely pleased to see that drop today. So, trading floor members can get access to the big money plays on the same day that they are called out, so you can get an entry and maybe catch some of these bigger moves like this. So check that out in the comments down below. Check out the link to the trading floor.
You know it. Well, Tom, as we all know, we are in earnings season, and while most of this week's big earnings have already passed us, what is on the schedule for the rest of the week?
Yeah, so not too much. For tomorrow, we do have BMY coming up, 3M, which is a pretty big company. My internet company, CHTR, which has been terrible lately, is reporting. Hopefully, we'll have to see how they end up doing. But nonetheless, that's the rundown. Even Colgate, maybe a couple of those value stocks mixed in there, a Freightliner as well. So not too much, honestly, though, on the earnings, Mike. The big ones were Tesla, Google, American Airlines, Ford, stocks like that. For tomorrow, though, there is some big economic data, which will be huge. 1 hour before the market opens. If you guys have a lot of big positions, you might want to wake up a little bit early because the PCE data will be released, and that's actually the Federal Reserve's preferred inflation gauge. Powell talks about core PCE all the time, so make sure that you guys are up early and checking out this data tomorrow.
Love it. And Tom, being realistic, there aren't too many crazy earnings, and we do have a handful of economic events, just like you said, but this is really just going to leave us to end the week mainly focused on price action, momentum, and just following market direction, which is the way I'd prefer it to be. We don't have to worry about any crazy speech or anything like that. So I'm pretty excited to go into tomorrow. But before we jump more into some specific setups for tomorrow, we have to jump back to SPY and see what is going on here. Obviously, the market has been struggling lately. So what would you say are the key levels going into tomorrow for both directions?
Yeah, so yesterday I was watching 540 pretty closely. It ended up giving out a little bit this morning. We saw a nice sell-off, and we saw a double bottom around the end of day start to form at 537.50 at that low of day. So I'm going to really watch that, as well as 537 even as the major support there. As I start to look at other areas to the downside, Mike, there's a lot of supports coming up. We're getting into an area of SPY where there was a lot of choppiness and a lot of price action in the past, but pretty much there's between 530 and 538. I'm really watching 531.50, 533.50, 535, and then 537, which is that pretty much like that double bottom that I talked about today. To the upside, watch 540 is resistance, 542, 544, and then 546. And you can see a lot of those bounces happening this week on the left side of your screen. So overall, Mike, those are the levels that we're watching on SPY. And I think the main thing is just to watch that low of day. And if it starts to give out, that'll be your opportunity. And of course, keep watching the big tech stocks as well, as they will influence most of this price action.
You know it. And another thing I did want to add is not even just specific levels on SPY to watch out for, but the way in which it moves. We could see around open today, SPY was putting a lot of pressure on lows, and it did sell off a decent amount, but it actually had a great recovery towards the middle of the day, but it just gave up all of those gains by the time the market closed. And I think that says a lot, because even though the market tried to run up throughout the course of the day, the fact that it not only couldn't continue to run up, but it actually gave up so much of its gains shows that there's a lot of existing selling pressure and a lot of sellers out there in the market right now that are just hammering the sell button, right? And I think that says a lot, and I think that's definitely worth noting going into these next couple trading days. And, it also says a lot how the market closed right near its recent low as well. But either way, let's get right into the good stuff for tomorrow, which are some setups to watch. A stock I'm watching pretty closely right now is Zoom, and we talked about this one a little bit earlier in the week in a bullish way, and it had a pretty great day today. Zoom is one of those stocks that kind of does whatever it wants, and it isn't too affected by the overall market. This stock is showing some really good strength in a time where a lot of other stocks are struggling. So I think that'll, indicate some good strength going forward. And I also feel like the stock is just so oversold in the grand scheme of things, where it presents a nice reward to risk in the short term. So either way, I will be looking at Zoom in a bullish way going forward. A stop can be placed right around that like $58 level with a profit target all the way up to like 63.50, or if you want to get a little bit more risky, maybe even like 65.
Yeah, that could be pretty huge there, and that the risk reward looks awesome on that, or I should say the reward risk looks really good there on this side of this, but I really do like that support on Zoom on the daily. I like the way it's holding up, and the setup is looking pretty good in the short term. Definitely will keep it on the radar. With my first stock, I'm looking at Tesla tomorrow, and I'm looking at this one in both directions. With the way it moved today, it showed a lot of consolidation, coming off that big drop yesterday. I wouldn't be surprised to see more consolidation tomorrow, but I'm really watching the range that it's kind of stuck in here. And if I go over to the book map, there's a major level that we actually hit in pre-market today that has to be on watch, and that's $210. So for tomorrow, if we start to see like a big sell-off in the morning and we see this negativity continue back into tech stocks, I'll be looking for Tesla to move back down to that 210 target, especially if we start to break under like 220 and 218. That'll kind of be where I'm watching for that flush to start. But nonetheless, 210 will be a major support. You can see it on the book map. There was a lot of buyers stacked up there today, and that was the low of pre-market. So that'll be a good target if we do see that selling pressure come in tomorrow. But I will be adaptable as always. I'm also watching 226 to the upside. And if we do end up seeing Tesla break above that high of day today, then I'll just have to adapt, right? But overall, I'll be looking for that downside move, and I do have a downside bias in the short term.
Awesome. And I love the adaptability there as well. But good stuff there. And another stock I'm watching pretty closely is Netflix, and it is in a bearish way going forward. This stock reported earnings recently and has been relatively weak. It keeps trying to run up, but every time it moves higher, it just gets rejected right back down. And it's actually making lower highs right now, which is normally a bearish thing to see. Either way, not only are we seeing bearishness with Netflix, but also the broader big tech group as a whole, as well as just the market as a whole. So I will be watching Netflix pretty closely to the downside in the short term. I would love to see it get back below that like $625 area again, and then put constant pressure on its lows. If it could do that, I would definitely look at this one in a bearish way.
Yeah, I've been watching it a lot lately, Mike. It just keeps consolidating. I'm like waiting for that big drop. It's kind of coiling, so to say, as a lot of traders would put it. But I'm definitely going to keep it on the radar too. With my next play, I'm looking at American Airlines, and this stock's actually back to the upside. So this morning was pretty weird for the airlines. They tanked down, and then they ended up shooting right back up with their earnings. And even other airlines like Delta did the same exact thing, as of course they moved together quite a bit. But with American, I'm just going to keep looking for good bullish price action off of the earnings move. There was a really good resistance around the end of day today, right around $10.90. So if we see a good solid breakout up above there, then I will look at more upside momentum on AAL.
Sounds good. Well, it's now about that time for today's momentum plays. And with the first one, we have Chewy to the upside.
Chewy is another one of those stocks that had a great day today on a day where many other stocks were not the best, so to say. If they end up breaking that high of day right around $25.55, then keep watching them up.
All right. With the next one, we have Qualcomm to the downside.
QCOM. Yeah, the chip stocks have been rough. If Qualcomm ends up breaking under 174, then also watch them down.
All right. And then with the last one, we have NVIDIA for both directions.
Yeah, NVIDIA was kind of wild. It tried to run up, ended up closing slightly in the red here. If it ends up moving back under 111, I'll be looking at NVIDIA back to the downside here. It had a pretty rough move at open. Really caused a big sell-off on SPY as well. If it ends up ripping back above the high of day at 116.50, then I will adapt and watch it back up. But overall, of course, downside bias in the short term here.
All right, so we have that downside level for a potential move lower. We have the upside level for a potential move higher. This is with NVIDIA. Don't forget about the downside level on Qualcomm and the upside level on Chewy. But either way, these three stocks are on watch for potential day trades tomorrow if and only if they break through the levels Tom listed. The stronger and more consistent the price action is, the better the setups become. If they do not break the levels listed, do not feel the need to follow the setup. Basically, prioritizing stronger, higher quality, more consistent setups is a lot better than forcing a mediocre one. So let's look for true breaks through the levels listed and prioritize setups like those ones. But Tom, it's now about that time for today's $700,000 big money trade, and we are looking at ticker symbol VRDN. Today, the big money bought the 15 strike call options that expire on September 20th of 2024. For those of you who don't know, VRDN is a biotechnology stock, which basically means it's a lot crazier than your average stock. Biotechnology stocks move in very crazy, weird, just wild ways. They move a ton based off of like FDA approvals and just like any sort of developments with the treatments that they are creating. So looking at VRDN, when you see a big money trade like this one worth $700,000 on a call option that is already in the money and that has some time to it, it's definitely worth noting. The reward to risk on this setup is definitely good. And I also like how in the grand scheme of things, the stock is recently, I guess you could say, bouncing off of its lower support area, and it has also been making higher lows over the past couple of years. So it's not a bad setup by any means, but it is definitely crazier and riskier than normal.
Yeah, it really is. I will say somebody in Discord earlier asked, like, hey, isn't this stock a little bit overextended? And that's actually a good question. I think a lot of people might be thinking that in the short term because, a lot of people are probably going to like zoom in on the chart. But as you zoom out, like you said, in the grand scheme of things, it's actually fairly low and fairly close to support still. Some of these moves off of this support have been pretty exponential. Firstly, some of these bounces they don't seem like they were much, right? On the chart, that was 100% on this bounce that I'm showing from back in 2021. This big bounce ended up being like 300% to the upside. That was insane. And then this most recent one was 100% again. So, it's like, where are we going to get to on this specific bounce on this support? But it's always interesting to see the big money buying up like a therapeutics or pharmaceutical stock. Because like you said, there's like crazy news, like FDA approvals, or they could maybe like announce like, good research on a drug, or there's all types of stuff that they could possibly say here. So I think it's very interesting. And whenever you look at the big money in pharma stocks, we've seen some pretty wild movers in the past.
There we go. So keep a close eye on this one going forward. But with everything being said, the market has been crazy lately, and this craziness isn't going to slow down anytime soon. Volatility is here, and it's here to stay at least for the next couple months. What's more important than like any other time is to remain adaptable when it comes to the market each and every day. We're going to see big moves in both directions, and there will be a lot of opportunities in multiple different ways if you position yourself correctly. Bulls have made a ton of money this year, and bears are starting to get a little bit of a taste of what the bulls have had over the past year. But who will make the most money are those who are willing to, adapt and change their bias and perspective each day as new news and information comes out. So definitely keep that in mind. As always, prioritize smart, healthy, long-term, sustainable trading habits above all else, like having stop losses and, even more importantly, respecting them. Having a trading plan before you enter a trade, and just trading in a smart, disciplined, rational way. It's a lot easier said than done, but those who, do have solid fundamental trading habits surely have much different results from those who do not implement those sort of things. So definitely keep that in mind. But Tom, before we close out, we have to give a giant shout out to today's member of the day, Blue Chip in the Stocked Up trading floor. They did great with yesterday's Google big money trade, and they've been a great member of the community since they joined over the past couple of weeks. So huge shout out to Blue Chip. Thank you for being a great member of the community, and keep on rolling. Besides that, if you guys are new to the channel, consider demolishing that subscribe button to get our videos recommended to you more often. In every single video, we cover everything you have to know about the market. We show charts you wouldn't find anywhere else. We cover big money trades to sometimes the extent of multiple millions of dollars, just like Google's one yesterday. And it takes us hours to make these videos, and we just cover everything you have to know. So consider demolishing the subscribe button, and you'll get our videos recommended to you more often. Besides that, thank you all so much for watching, and let's end the week on a great note.